Hi guys, it's Michael Murray with Benzinga. I'm here with Joey Agree of Agree Realty discussing the Rethinking Retail campaign, how it's going to change the resale industry, some of the things that Agree Realty is focused in right now, and getting a take on how the retail industry is being affected by the pandemic and plenty of other factors that we've had in 2020. Joey, great to be with you.
Great, thanks for having me, Michael.
Absolutely. So Joey, everybody should know Agree Realty. For those who don't, can you give us some background, a little bit of context about where they came from, what the beginnings were, and kind of where you guys are focused at right now?
Sure. The company went public in 1994 as Agree Realty Corporation with 16 community-anchored shopping centers as a publicly traded REIT on the New York Stock Exchange. In 2010, a notable really milestone for us was the launch of our acquisition platform. Since that time, we've invested several $1 billion, really creating a first-in-class net lease retail REIT that's a landlord to the largest retailers in the country today. So Walmart is our largest tenant, TJ Maxx, Tractor Supply, CVS, Home Depot, Lowe's. And so the largest retailers in the country come to us as a preferred retail partner. And we'll invest anywhere between $1.25 billion and $1.4 billion in net lease retail assets this year across all three of our platforms: development, acquisition, and our partner capital solutions platform.
So Joey, Rethinking Retail, give us a little bit of background and context to this concept. What is it? What is it going to mean for consumers specifically? Kind of give us the rundown on Rethinking Retail and this whole concept we're working on here.
Yeah, look, there's been a lot of noise and a lot of headlines about the devastation or the destruction of brick and mortar retail in context of Amazon and e-commerce. What we're really challenging investors, or retailers, consumers to think about is retail, brick and mortar retail being an integral part of an omni-channel world. And so the pandemic has accelerated a lot of the trends we've seen historically, really since Amazon's inception as a non-just ebook retailer and call it 2010, 2011. In 10 years, obviously, e-commerce has expanded dramatically. I think everybody here is well aware of that. What they aren't aware of is that e-commerce-based retailers or digitally native retailers have found and have learned that brick and mortar retail presence also helps their sales. And so today what we see is, in the future, what we think we're going to continue to see is brick and mortar being the linchpin for an omni-channel world. Amazon has a huge physical plant. Most people don't realize it. They obviously own Whole Foods. They have Return at Kohl's. They have Amazon Locker, Amazon Go, and now is launching Amazon Fresh. And so they have a large physical plant that we see will continue to evolve. At the same time, historic brick and mortar retailers like the Walmarts of the world, Home Depot, Tractor Supply, dominant grocery stores are all building out their digital capabilities and their e-commerce based capabilities with things like click and collect and delivery, same day delivery even, buy online, pick up in store, the new acronym which is out there, BOPIS. Which everybody is talking about in the retail world. And so solving that last mile, which is the most expensive piece for retailers to deliver and the most inefficient piece to deliver to someone's home, really revolves around an omni-channel brick and mortar presence being the linchpin of success, whether you're ordering online, walking in store and purchasing goods or services, or ordering online and picking up at store or at a locker. Rethinking Retail is about thinking about that omni-channel world, how brick and mortar plays into it, and how retailers and consumers can be most efficient and successful navigating that world.
So Joey, rethinking real estate for real estate investors, how is this going to impact their industry specifically? What kind of changes are we going to see from a real estate investing aspect? What do you see happening there with Rethinking Retail?
Look, it's a great question. And retail real estate is going through fundamental changes in this country. We have 24 square feet per capita in this country. I fully anticipate that e-commerce-based sales, whether it's delivered or picked up in store, are going to stabilize around 25% of total retail sales ex-fuel in this country. Now, when you look at that, it's a significant portion of sales, and we also have a significant square footage in this country per capita. So the next closest country is Canada at 16 square feet per capita. For reference, Western Europe has about 4.5 square feet per capita of retail square footage per person. Asia is the lowest at about 1.5 square feet per capita. Now there's densities and population centers and more rural areas, obviously in the United States that relative to Asia, which impact those numbers. But what we're seeing is retail is a K today. Strong retailers are on the upper half of that K. They are getting bigger and they are stronger. They have the balance sheets, the ability to invest in distribution, in logistics, and all of the capabilities that are necessary. Weaker retailers don't have the balance sheet, don't have the access to capital, haven't been investing historically on that true omni-channel experience for customers. And so retail's going through those changes. Our focus at Agree has been working with the biggest and best retailers in the country. We call it our sandbox of 25 retailers, plus or minus, that are the best and strongest retailers in the country, that have the omni-channel capabilities and that are positioned to not only succeed, but have succeeded, and really most of them have thrived during the pandemic, leveraging those logistics and distribution capabilities that we're talking about.
So Joey, you're saying that online only is dead and omnichannel is going to be the future, especially in retail. Can you give us a little bit of background and maybe a definition of what omnichannel is, what it's going to mean, and what exactly the implications of that are for the retail industry?
Yeah, just up as recently as 3 years ago, 2 years ago, we would read about every week on the cover of the Wall Street Journal. It seemed there was 3 successive weeks, I think, where Amazon was entering auto parts, Amazon was entering the grocery space, Amazon was entering this, and everybody thought this was a binary outcome here. Is that e-commerce retailers, historically Amazon being obviously the 100-pound gorilla, versus brick and mortar retailers. What is truly materialized is what you referred to, what I referred to, and the industry refers to as omni-channel retailers. Distribution, same-day delivery, distribution from stores, shopping in stores, micro-fulfillment, macro-fulfillment from universal warehouses or larger warehouses like the Kroger-Ocado partnership, which is developing here. And so what omni-channel really means is that the consumer has multiple different points of entry to purchase a good or service, whether it's on your phone, on an app, on a mobile website, on your desktop, walking in the store, purchasing online, buying and picking up in store. So omnichannel is a full 360-degree experience for the consumer, and it's incumbent upon retailers today to figure out how best to navigate that world and make it most efficient for a consumer. And so what an omni-channel world does is it provides a ton of opportunity for consumers. Many of us can recall, probably you, Michael, but we can recall going to the mall, starting at Macy's or JCPenney's on one end, checking the price of a good, whether it was a washing machine, a TV, or a sport coat, and then traversing the half mile across the mall to the Sears or JCPenney, checking the price there, and if it was cheaper at the first place, walking the half mile back and buying it. Well, that is now turned into one click on your phone. And so the consumer has all price transparency and leverage today. What's incumbent upon, what's most important for retailers is convenience, experience, and being competitive with services and offerings. And so that's a true omni-channel world that is very different from that mile back and forth we just talked about only in a brick and mortar world.
Well, it's going to save me a lot of walking. It's a great breakdown. Appreciate it.
That's true.
So Joey, what are some other companies that are going to win in this arena? Give us some context and maybe some ideas for who else is actually going to win with this trend and who else is going to come out ahead in rethinking retail.
Yeah, and so look, the pandemic has accelerated with the trends we've already seen outside of a few aberrations. But unfortunately, in a lot of aspects, the larger companies who are our partners, who are our tenants, are winning. Right? This is very expensive to compete in that omni-channel world. It's very expensive from a distribution perspective. It's very expensive to be able to compete on price. Ultimately, the consumer wins. They're getting the cheapest price. They have price transparency. And so the larger retailers have an inherent advantage here when it comes to investing, access to capital, cost of capital, public capital markets in all areas of their business. That said, local merchants, we get through this pandemic, it's going to open up a lot of opportunity for local merchants to focus on service, in-person service, and unique assortment and merchandising and all the different things that local merchants can build. Who the real losers are, which I think is readily apparent today, is the regional and weaker national players that are stuck in the middle, right? They don't have the one-on-one relationship that you have with your local merchant, whether it's a dry cleaners or it's selling clothes, a clothing store. And they also don't have the access and cost of capital to compete with the nationals. And so again, retail, we really see it as a K, the strong getting stronger and the weak really, really dissipating and dying off here. We've seen a lot of indications of increased bankruptcies just due to that, frankly.
So there's certainly going to be winners and losers in this equation. This isn't just a case of everybody being able to benefit from the omnichannel. Unfortunately, there will be people who are going to ride kind of the downtrend of this and maybe lead to extinction.
Yeah, I mean, look, omnichannel is a very expensive proposition. The big secret out there, which really isn't a secret, is the retailers lose money online. And so they're all figuring out, and most of that's due to shipping, right, and returns. And so they're all trying to figure out how to make money online across all these sectors. The only retailer who truly makes money online is eBay. And eBay has no inventory. They're selling third-party goods. And so while revenues have increased, EBITDA and margins have shrunk. And so online, I order things online, 70% of the time they get returned because they don't fit or you don't want it anymore. And so it's a very expensive proposition. And so as retailers navigate that world, encourage consumers to solve the last mile by driving to the store rather than shipping it, which is the most inconvenient piece and inefficient piece for a retailer. It presents a lot of opportunities for retailers to frankly rethink retail. And that's what we're challenging everybody to do here is stay away from the retail narrative that brick and mortar is dead, right? The real retail narrative today is strong brick and mortar retailers or strong e-commerce based retailers or digitally native brands are going to thrive when they bring all of these pieces together and figure out how to make them profitable.
Joey, Agree had a phenomenal year during the pandemic, specifically an excellent Q3 pursuant to your last earnings call. Can you give us some of the growth drivers and some of the things that helped you guys step up the momentum and have a great year, even during these challenging times?
Yeah, we saw a pandemic and we saw an opportunity. And so we've always had a historic, really a rock solid balance sheet. During the month of April specifically, we built a war chest. We've raised over $1.2 billion in capital this year, $350 million in our first unsecured public bond, the rest in common equity. And so we built a war chest. We took our balance sheet to 0.7 times debt to recurring EBITDA, which is the lowest in the REIT space, and effectively built $1 billion plus war chest. What you saw in Q3 was really the deployment of that war chest. And so we acquired approximately $460 million in real estate, leased to 80+% nationally recognized industry leading retailers, the best in the country: Home Depot, Walmart, Lowe's, TJ Maxx, Marshalls, National Tire and Battery, AutoZone, O'Reilly, our first Wegmans, a small format Target in Scottsdale, Arizona on Camelback Road, some really high profile real estate, a TJ Maxx combo store, Home Goods Marshalls, actually in Napa Valley. We bought the Home Goods in the Hamptons. We bought the TJX combo store in the University of Oregon right off campus in Eugene. And so we took advantage of the capital that we raised. Our average transaction takes about 70 days. We closed about 90 specific different transactions in the third quarter and have really built what we think is the strongest retail portfolio in the country with fantastic partners and a great team here at Agree that's been working their tails off in the middle of the pandemic.
So Joey, tell us a little bit about your strategy. You guys have grown very aggressively since you took over as CEO, especially during the last couple of years. When you took over, your tenants were about 60% Kmart and Borders. You guys have grown far beyond that since then. What's your plan for the next few years? Do you plan on continuing to expand so quickly and aggressively? What's your guys' plan for moving forward?
Look, I had a unique opportunity as a young CEO running a publicly traded REIT. We owned Borders' flagship store in Ann Arbor, as well as the only office building the company ever owned was Borders headquarters. And so I had a unique opportunity as approximately a 30-year-old publicly traded CEO to see firsthand the first retailer that Amazon decimated. At the time, Amazon was just a digital bookseller. They weren't selling everything under the stars. They were just selling digital books. And I saw firsthand what digitization and e-commerce could do and the impact and the disruption it could create for a historic brick and mortar retailer. It was a scary time, I'm not going to lie. Now, what we learned from that, and it was probably the most important lesson of my career, we carried forward. And we decided at that time, in April of 2010, to launch the acquisition platform and focus on the best retailers that at the time we said were e-commerce resistant. Today, we say they're brick and mortar omni-channel critical. And to create a diversified, high quality portfolio, knowing, and we had a young team, including myself at the time, what the future looked like in terms of how powerful the internet and e-commerce was. And so we had a head start in terms of just thought leadership at the time. And so we've invested several $1 billion since that time in April of 2010. The future, we have tons of opportunity. The largest space in the retail sector is net lease. It's 65% of U.S. retail square footage is net lease. So it is the largest sector as opposed to malls and grocery anchored centers and shopping centers or power centers. It's also the oldest sector. The first stores where people rode their horse and buggy up to the corner store. It's also the most important sector and the most critical sector to be frankly functional and successful in that omni-channel world. If you want to get cars in and out, and people picking up goods, and the use of drive-throughs and the use of BOPIS, pickup lanes, rapid delivery, same-day delivery, you can't be stuck as a retailer in the middle of a shopping center anymore or the middle of a mall. Cars have to be able to circulate your site, similar to what they do at Chick-fil-A or Starbucks or McDonald's. It's not about getting as many people in the door as possible anymore. It's about getting many goods out of the store as possible, whether it's from picking up and ordering online or buying in store. And so vehicular traffic and net lease is a critical, or freestanding net lease is really a critical component to the future here as retailers look to make things as most efficient as possible. And then you exacerbate it in a contactless world in the midst of a pandemic. And so our focus has been on the best retailers in that freestanding format that weren't reliant upon anchors such as JCPenney or Macy's or Sears even to drive that type of traffic, that we thought we were going to be successful with the rise of Amazon and e-commerce. And obviously people forget this is only a little over 12 years old, this iPhone. And so it's all new, it was all fresh. We had a young team that was that frankly had a good vision of the future.
So Joey, 10,000 foot view, looking down into the future, what do you see the future of retail being? If we look at a 30,000 foot perspective of how the retail industry is going to change, how do you see things altering and changing to fit this new model of retail? And where do you see us being 10 years down the road from now?
10 years is an eternity, right? In today's world. In 10 years, I think, frankly, we will forget what retailers were historically brick and mortar retailers and what retailers started as online retailers. There will be Amazon formats and stores all across this country. They're gearing up for their second grocery concept, Amazon Fresh. The first 2 stores have opened in California already. 10 years from now, my children who are 7 and 9 years old won't remember if Walmart started online or Walmart started as a store, brick and mortar store. The same goes for Amazon. Home Depot's building 40 million square feet of distribution space for e-commerce today. They're building 4 or 5 total new stores. And so the world is going to blend together, and people aren't going to say, oh, that's an online retailer or that's a brick and mortar retailer. It's going to all be omni-channel retail. And whatever is most effective and efficient for consumers, that's what's going to frankly drive the end of the day, as long as retailers can be profitable. Right? At the end of the day, they still have to be profitable and service the demands and desires of consumers. So I'm not sure if that drone that Jeff Bezos showed off in 60 Minutes years ago is going to actually be delivering packages to our doors or not. But I'll tell you, we won't remember if Amazon started online. At least my kids won't remember. If it started online or it started as that store down the street, it's all going to be the same, omni-channel retail.
So Joey, it's been a wild 2020. It's been a crazy year facing the pandemic and plenty of other challenges, and crazy would be an understatement for how this year's gone so far. To what extent would you say that this rethinking retail model and how this industry is going to change has been affected by the pandemic? Has it been accelerated? Would you say that it's been pushed forward by this, or would we be moving ahead at the same pace anyway?
Hey, that's a great question. Look, most of the trends we see today were already in existence and readily apparent before the pandemic. The world is heading toward omni-channel. It was just the rate of change. What the pandemic does is accelerated somewhere between 5 and 7 years, depending upon where the maturation of specific retail sectors were in the cycle. Let's take, for example, e-commerce grocery. Prior to the pandemic, which seems like a decade ago, but it was only, 9 months ago here in the US domestically. Prior to the pandemic, e-commerce grocery in this country was about 1.5% to 2% penetration rates. Compare and contrast that to Great Britain, which was about 6.5% penetration rates. The analysts, the grocers, the general, the pontificators of retail grocery thought that it would take 5 years, approximately 5 years, for the US e-commerce rate to hit Great Britain at 6 to 7%. Today, people believe that it stabilizes at 10% post-pandemic. And so the rate of change has been absolutely amazing. I mean, my parents are using Instacart today. They never heard of Instacart before. The rate of change, the adoption has been unbelievable. There are people who will never go back. Contactless delivery through Instacart or Walmart Express or Amazon. There are people who will never go back. At the same time, while we saw the acceleration of the pre-existing trends, we've seen some abnormalities. Pet stores, Petco filed to go public. PetSmart has thrived. Everyone has a dog. You can't get a dog anymore. You know, before the pandemic, everyone was saying Chewy was going to decimate and hurt these retailers. Sporting goods. Retailers ran out of bikes, guns, kayaks, paddle boards, all different types of outdoor activities. Academy Sports went public. Pre-pandemic, everyone thought they were in trouble. And that was a space that had a lot of challenges. And then lastly, office supply stores. I mean, who would have thought that office supply stores would thrive ever again? The pandemic with home offices, office supply stores, Staples, Office Max, Office Depot have thrived. So those are idiosyncrasies. They may have some marginal pickup or incremental pickup post-pandemic, knock on wood, hopefully sooner rather than later. But what we've really seen, I don't consider those investable sectors or retailers today. What we've really seen is just a dramatic acceleration, call it 5 to 10 years of existing trends across different sectors. And I don't think there's going back for a lot of people.
Joey, thank you so much for your time. Rethinking retail, how this is going to shape the market moving forward. It's obviously going to change a lot of things about our lives, and this is going to really alter the way that retail is looked at as a whole. So thank you for breaking it down for us. Thanks for taking the time. Really appreciate it.
Thanks for your time. I appreciate it, Michael.